Hi guys, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 4th of July 2020. Now, before I do the usual and switch over to the screen share so I can go through some charts with you this week, I think obviously something to understand is obviously the market has had a large move to the upside this week, and obviously it's been incredibly lovely. The market has been moving terrifically well over the last 3 months. The charts that I'm going to be walking you through this week are obviously technically focused in the approach. For those of you that are maybe just coming across my channel for the first time, you might not believe in it, you might think it's nonsense, but technical analysis is what I do. So if you're somebody out there that is coming in hoping to listen to somebody talk about the economy or anything like that, it's not going to be a video for you. It's also not going to be a video for you if you're looking for day trading tips, get rich quick schemes, all that nonsense. It's not something that I provide analysis on, unfortunately. I receive a large number of emails every week asking to teach day trading, etc. I don't get into that. I provide charting research. So hopefully you get some insight from this. As usual, there's about 25, maybe 30 charts, lots of ideas for the forthcoming week, everything that you guys are used to. And like I said before, hopefully you get some insight from this. Obviously 4th of July weekend in the US, so those of you in the US, please do stay safe. I'm not sure what the social distancing situation is yet, but stay safe out there. So let's go and have a look at the charts and let's see what the market's telling us this week. So before I get into the charts, please do pause the video, make sure you're comfortable with that before watching any further. There's not any investment advice here. You're in charge of your own capital. I assume no responsibility for anything. These are just charts. Now, most of you know this already. I'm registered with the CMT Association. Technical analysis is something that I'm widely known for. I'm working my way towards chartered status, and hopefully you get a bit more insight into the technical side of the game and obviously what we're looking for with a trend following approach. And please, if you do get some value from this, we do try to upload every few weeks. So yeah, subscribe to the channel, give a video a thumbs up if you like it. It all helps with the YouTube algorithms and it'd be very much appreciated. So let's just dive into the charts, and I'm going to spend 2 or 3 minutes just walking you through the overall market. And then I'm going to get into the individual stocks, individual charts with entries, potential targets, areas where you might want to consider your position, but hopefully it all makes sense. But we'll start off with the relative rotation graph. Now, I think you would have to be in cuckoo land to not realize that tech has been a massive area of focus over the last few months. With the rotation graph, we've got the leading areas of the market, we've got the improving areas, we've got the lagging areas and the weakening areas. Now, we can obviously see biotechs, cloud computing, tech in general. They've all been places where you've wanted to be allocated over the last couple of months. Like I said, that's not going to break the internet. But what we try to do at honeystocks.com is try to identify areas that might be working its way, because when you think about a rotation graph, the theory is behind it that we just move in circles. So what areas are starting to look like that they're showing a little bit of relative strength to the S&P 500? Well, utilities had a good last couple of days of the week, so we've started to kind of move upwards, and I would like to see these areas start to move into the improving sector before we start to consider them for risk allocation. I think we would be focusing mainly on these areas of the market, given they're in the leading areas. We like to identify strength because it's just easier. Now, the S&P 500 Again, I'm not going to labour the point too much. We've obviously been in a big uptrend recently. I know there's a massive disconnect between the stock market and the economy. I'm not going to touch on any of that. All I'm going to say is that if we get a breakout here with the S&P 500, that is not going to be a bearish development for stocks. I know some of you will be unhappy because a lot of you, I'm sure, will be shorting stocks because you think the valuation's too high. Again, I'm not here to kind of, talk on that too much, but we can expect a move higher if we get a breakout here in the S&P 500. To the other end of that, what would give me concerns about the overall market? Now, we know that we've got areas like tech that have just defied all logic and are just been motoring higher. So there are areas where I would be looking to get defensive. I think we have to be bullish tech at the moment. You would have to be stupid not to be bullish tech. But if we were to see a breakdown below this level in tech, we can clearly see that when we've had divergence in the past, now this is an RSI divergence, we know that this correlates to substantial drops in the market. So we are potentially seeing that again. Now, this could quite easily correct itself over the next few weeks, and honestly, I would be very, very happy if it does, because nothing is easier than a bullish market. In uptrends, any pullbacks can be bought. It's just easier. Now, that said, we've obviously got the Dow. Little bit of a concern. Obviously, the Dow basket of the 30 biggest companies, and this would be a level, the 200 period simple moving average. Again, it wouldn't be a bearish development if we were to break above this level. So again, the outlook for stocks as an asset class is looking bullish at the moment. Last week I did have concerns towards the end of the week because it looked like we may be dropping below key levels in the market. I think last week has obviously corrected some of those concerns. But again, if you follow my social media closely, you'll already understand that I reserve the right to change my thesis on 30 seconds notice. So some of the charts that I'm going to be walking through this week, the outlook may well have changed by Monday or Tuesday. That's the technical approach. It doesn't give us a crystal ball into the future, unfortunately, but what it does allow us to do is to identify good stocks and manage risk. Managing risk is the number one priority, and profits generally fall in the back of good risk management and obviously good stock selection. So the percentage of stocks that are trading above their 200 period simple moving average has actually declined a little bit over the last couple of weeks. We were up at 62% of stocks trading above the 200 period simple moving average. We've had a little bit of a healthy pullback in my opinion, and we're currently 40%. So there has been a slight deterioration within that particular breadth indicator. But again, we can clearly see that the breadth is moving higher. So I'm happy with what I'm seeing at the moment. Obviously, gold is a massive area of focus at the moment. I think, again, it's not going to be a bearish development if we break out of an 8-year base. I think this is something that is widely expected. I think when you see the news, the Goldman Sachs, the JP Morgans of the world, they're becoming increasingly vocal in their bullish thesis on gold. I would have to support that at the moment. But again, I'm just looking for confirmation. I don't like to jump in before something actually happens. So for me, gold as an asset class, I think above $1,800 would make a lot of sense there. And I could really see gold making a massive rip higher. So I think gold would be an area of focus for most at the moment. Obviously, TLT, Treasury Bond ETF, it's done absolutely nothing for a few months now. Obviously, with the stock market ripping higher, we would see traditional defensive areas of the market start to either decline or chop sideways. That's what we've seen here. I've got a bit of a loose looking trend line. I'm not giving it much weighting at the moment. It looked like we were breaking out, then it's pulled back. Is this a retest before it moves higher? What would it mean if we have TLT and gold moving higher? What would that mean for stocks? Again, we just have to wait and see. We don't have crystal balls. Nobody has a crystal ball. Anybody that tells you that they know what's going to happen with the stock market, you should take it with a pinch of salt. Now, we've obviously got elevated volatility at the moment. We've obviously had a massive rip higher with the crash that we've seen. There has been a bit of a steady decline, but we can clearly see that volatility is still elevated. It was very, very pleasant for me this week to see volatility start to drop off a little bit over the last few days. Again, that would be an environment where stocks are likely to be thriving. So I want to see volatility completely fall away. And then what that should hopefully mean is we have nice, smooth, stress-free uptrends in the equities market. And I'm very happy when I see that. Now, that's the overall market. Now, there's obviously quite a lot of stocks here to get through. I think I've got 20, so hopefully, again, you get some trade ideas. Hopefully you get some insight into maybe some stocks that you're holding. Microsoft, I think we've just broken out above $200. Now, we know the round number concept, $100, $200, $1,000. It's not a bearish development that we start to move through these key levels. So I think we have to be bullish on Microsoft, provided we're above $200. Again, I'm not going to break the internet with a bullish thesis on Microsoft, one of the biggest companies in the world, obviously leading component of the technology sector. You have to be bullish on Microsoft at the moment. That said, we've obviously got Amazon. Now, this is a massive level of interest for me with Amazon. Yes, it's Amazon. I totally accept this. Now, what we can see with Amazon is that these Fibonacci levels, now don't ask me why 12th century mathematics works in the stock market, it just does. But we can clearly see in the past that when Amazon moves towards these key levels, we can get a little bit of a pause in price action. Now, when you look at what happened here, this is a 2-year period where Amazon couldn't get above $2,000. Now, this is what the technical approach allows me to do. It just helps us to manage risk. I don't want to be holding Amazon if it's chopping about sideways for a couple of years. I'd much rather say thank you very much, Mr. Amazon, and go and reallocate my risk elsewhere. So I've got a big watch on this level here. I think if we can move above this level, above $3,000, I think it goes to around 4.5. That would be a logical next level for it to go to. But again, if you're out there holding Amazon, I think this would be a level to watch for, to see if we get this a rejection or whether we break out. Breakout's obviously good, rejection is bad. We're not overcomplicating it, but there's a good 50% upside, I think, if we can break out above $3,000 there. CrowdStrike has now got a weekly close above $100. Again, that's not a bearish development. So again, the theory is that once we move through one level, we move to the next. So, you know, hopefully CrowdStrike breaks out. Hopefully there's a bit of follow through there. Very pleasing to see MasterCard get support here at a very logical level of support. The 200 period simple moving average. Descending trend line looks like it's got a bit of merit. So I think if we can break out here above this trend line again, that would be a bullish development for MasterCard, and I would suggest that that's maybe an area that you want to kind of do a bit of due diligence on. Match had an interesting week. I know there was obviously issues, I think on maybe Wednesday. I am currently bullish on Match, again using 12th century mathematics. Once we broke out above this level at 96, again, I think you've got to be bullish. It was interesting to me last week that despite obviously the stress that it was under, we pulled back, We found support at this level, and I think you just have to be bullish on Match, provided that we're above the $95, $96 level. And again, we're not overcomplicating it. We want to take it to the next level, and I think there's a good 50% upside there. Breakout in Teladoc Health. Again, it's not a bearish development. I'd be very interested to see what happens with this Monday, Tuesday. I think there's every chance that Teladoc starts to move. Beyond Meat, I get asked about this all the time. Again, I'm just looking for this level at 165, 166 to clear again, and then we're just looking to just take it to the next level. We're not day trading anything here. We're looking to identify the next big trend at the earliest possible point. And I think if we can get above that level at 166, I would hope that Beyond Meat starts to move towards 240. Again, I have to say I'm not a fan of the product. I'm not vegan or anything like that, but I think it's a stock price that pays at the end of the day. So I try to remove my preconceptions about any given product and just focus on price. And I think above 166, 167 seems to make a lot of sense to me. AMD is trading in a 20% range. So for those of you that bought in down here last week, congratulations. I think logical expectation is that this starts to move back towards the top of the range again. For me, AMD would be a stock that I would be looking to buy on a breakout here. Again, not overcomplicating it. For me, above $60, I'd be very interested in AMD. But I know that this is one that's obviously super popular, and I think this dip here, perfect buy opportunity, and I think it goes back to the top of the range. AYX, again, not overcomplicating it. We've had resistance, breakout, successful retest, off it goes. So I think if you're out there in AYX, I think you can continue to be bullish on AYX. ENPH, Enphase Energy, obviously huge issues a couple of weeks ago. It does look like it's found a little bit of footing here, but again, I think above 51.63, above this 38.2 retracement level, I think that would be the level. It's not any surprise to me that we got a bit of resistance here. So for me, it would make a lot of sense to just wait until we clear that level, and then hopefully Enphase starts to move again. Alibaba, China Tech, I think above 232 makes a lot of sense. Facebook, I think cup and handle pattern potentially developing there. Obviously there's been a big issue over the last couple of weeks with the ad revenues and the boycotting of some of the big blue chip stocks are boycotting Facebook. Again, I don't really have any view on that, but when we focus at price, we got a massive dip. This is a dip that many of our members bought, but I think above this level, for me, I think above 250 would probably make a lot of sense. CDNS looks like it's breaking out above this key level here, so I think above 95 makes a lot of sense. Now, DocuSign is very, very interesting. I love the product. I like everything about what they do, the ease of use. We have recently moved above a big level for the stock. Now, what I have observed this week, again, $200 round number resistance. So it'll be interesting to see what happens here. I think you can continue to be bullish above 175. Obviously, if it breaks out above $200, I'd fully expect it to start to motor towards 262. But again, I think this is a level that you'll find a lot of traders tend to profit take at these big round numbers. It has a lot of significance in the short term, but I think above this 423 Fibonacci level probably makes a lot of sense. GDS looks like it's on a beautiful uptrend. For those of you that maybe caught my analysis a couple of weeks ago, with my custom index on China. GDS is part of that custom index, which is motoring higher. So again, I think GDS, China Tech, if you want exposure. We've obviously got Alibaba. I think GDS might be an area of focus. We've got Home Depot. Again, very similar looking chart to Facebook, and the fact that we've obviously got a rising trend line resistance. So again, I'd just be looking for that to clear. Again, area of focus if you're holding Home Depot at the moment. If you're technical in your approach, then I think this level has a lot of merit. IRBT, for those of you that obviously follow my work religiously, you'll know a few months ago I was highlighting this on this breakout here. It's obviously done very well. It's still going, so long may it continue. We don't like to put caps on how far stocks go. We're not in it for $2-3 moves. We want to be in stocks for $20, $50, $100 moves. We use technical analysis to our advantage. We're using things like trailing stops to help us stay in the trade for longer. So again, I think this level here has a lot of interest, and the trend, the direction is up. There's a lot that obviously has to happen for it to get back to 134, 135, namely navigate earnings season, etc. There's no guarantees that we get there, but we want to stay in the trade for as long as it's paying. Square Inc, massive move. So yeah, I think continue to be bullish. We've obviously had a close above $100 this week. It's just surpassed all expectations. This is a stock that many of our members are doing very well on at the moment. Long may it continue. So again, I think Square Inc is probably a stock that you want to add to your radar. Livongo Health, looks like we've got a bit of a bullish setup developing here. So again, not overcomplicating it. We just want to break out above the trend line, and hopefully we get some momentum continuation come in, and hopefully that starts to move towards 95. Netflix, again, rising trend line. Looks like we've had a breakout, little bit of a wobble there on Thursday. Perfectly reasonable behavior for price. So hopefully we get a bounce to the upside here, and hopefully Netflix continues moving. Again, I'm not going to break the internet with a bullish Netflix thesis. I get it, but hopefully you're learning that identifying strength in the market is easier than identifying weakness. We've got Nike. Again, looks like we've got a potential triangle pattern developing here. So what we're looking for here is an up breakout, and I think above $100 there for Nike would make a lot of sense. Now, I've taken a lot of heat privately on my Nvidia call. What I've essentially said over the last few months is that this is a level of interest. Again, 12th century mathematics. I think if Nvidia gets above 385 here, I think there's every chance that it starts to make its way towards 621. Given that it's a momentum type stock as well, it's demonstrated this in the past, it would not surprise me in the slightest to see a Tesla type move, for example. So again, I think if we can get above 385, I think that's a massive level of focus. NVTA, again, looks like we're breaking out of a bullish flag pattern. So again, there's a lot of upside potential in that one if it continues to go. Pan American Silver, I like it above $31. Peloton, I've been asked about this one a lot this week. Obviously, massive home fitness brand. I think logical target there. I think up at $68. Hopefully it goes beyond that. But I think initially, I think $68 would make a lot of sense. PayPal, again, very similar to iRobot in the look of the trend. We want to be staying in the trend for as long as possible. There are tools that we can use to help us do that. And this is how I see PayPal, massive uptrend. I'm not about fighting price. The direction of price is up. were nice, steady uptrends. This is what we want to see with momentum. We want to see it just hover around the 60, 75 level. It tells us that we're in a nice, consistent uptrend. So I think PayPal, if you're not in it at the moment, or it's not on your radar, it probably should be. Massive momentum potential with Roku. It wouldn't be a bearish development if we break out here of a bullish looking triangle pattern. So we're just waiting for this breakout here. I don't like to buy stocks until it's kind of showed me its hand. So again, I'd be watching this level with a lot of interest on Roku. Starbucks, again, we're trading in a bit of a 16% range at the moment, in my opinion. We've had 3 touches. The expectation is that it goes back to the 4th touch. It does have, I believe, the 200 period simple moving average to kind of navigate to get back. So if you don't like to buy below the 200 period simple moving average, I think if you break above that level, I think you can probably buy it above 84. But I think if you're out there in Starbucks and maybe you're viewing it as maybe a shorter term hold, then I think this would be a level of interest to keep a very close eye on. I think we're breaking out with Trade Desk at the moment. Again, the trend is up, and I believe, from what I understand, Trade Desk is probably a beneficiary of the issues that Facebook is having at the moment. Again, I can't really speak to the fundamentals. It's kind of just what I've picked up from my limited fundamental understanding. So again, yeah, I think Trade Desk is probably one to keep an eye on. Slack Technologies has been very, very frustrating. I get asked about this one quite a lot. The concern that I have maybe with Slack, and I believe it's a really good product, slight concern I have here is that we've broken below the 50 period simple moving average, and I think if we break below the $30 level, I think that would be another issue for the stock, at least in the short term. I'm sure long term it's fine, but I think given that we've put in a lower high, that's not a bullish development. So it's like we're getting resistance at these key levels, and that's not something that we see in uptrends. So if you're out there and you're in Slack, I'd be keeping a very close eye on this $30 level. And then we've also got Zscaler again, massive uptrend, and the trend is up, price is going up, and I think if we can break above this level at 120, I think Zscaler is probably appealing to most of you out there. So that really is my analysis. If you've got some insight from that, please do subscribe to our channel, give it a like, a thumbs up. Like I said before, it all helps with the YouTube algorithms. If you are somebody, however, that maybe does struggle a little bit with your trading, your charting, whatever it is, what we do at honeystocks.com is we have an annual membership, and within our annual membership you get access to analysis like what you've just watched. You have access to our premium weekend analysis. You would have access to our trading community. We provide charting requests. I'll show you what that looks like in just a second. I'll obviously show you what our trading ideas look like in just a second. But I think one of the reasons why our membership is really popular at the moment, and it has been since the new year, since we started including our technical analysis tutorials within our membership. We used to charge a lot of money for it. Yeah, it's a very, very popular offer that we've got at the moment. So this is what our trade ideas look like. I think it's very important to offer transparency with my work. On our website, I'll show you that in just a second, but this is what a trade alert looks like. As you can see on the 27th of May, NVTA, very, very clear. I was saying we want this to happen. We've got very clear parameters in place of what we're looking for. And as we can see within VTA, we're up at $31, $32, and we're looking to take it even further. So that's just one example. We've also got Zscaler, which on the 5th of May, we provided this chart to our members. Again, we're looking for a break above $71. We're now obviously up at 120. It's still paying our members. So again, that's what we're doing at honeystocks.com. We've got another one here, Pan American Silver, above $23. We're now up at $31 at the moment. So it's very, very, I suppose, logical in our approach. We're not overcomplicating things. But one of the other aspects of what we do is we provide charting support. As you can see, on the 16th of April, one of our members asked me for my chart on Twilio. This was the chart that was provided, and obviously Twilio's up at something like 220 now. So that's kind of an overview of what we do at honeystocks.com. Now, the other side of it is I offer complete transparency with our trade ideas and our trade alerts. I don't know anybody else that does this. In my opinion, this should be the industry standard. I log on my website every single trade alert that's ever been posted to our group. Now, I'm obviously bound by a code of ethics with the CMT Association. I don't cherry pick stocks. Every single stock is included from 2018 onwards. These are the 2020. Obviously, we had the market crash, so there was a period, for 6-7 weeks where there was just no trade ideas. But again, you can go in and have a look and see if the types of stocks that we select are a fit for you. We don't pick penny stocks. We're not trading stocks generally under $10. So go and have a look at that. And if the membership looks appealing to you in any way, I would highly encourage you to just go and have a look at our website. Some of the incredible successes, $45,000 profit in June. That's Rob, incredible. Arpan, 30% profit on a trade, $800 profit. David, 12,600 profit on options. Jamie, 150%, 50% account growth since the start of the year. So it's not just about me anymore. There's obviously a network of traders and investors that come together with an incredible amount of knowledge. It's not a day trading group or anything like that. What we do, however, is, again, we offer transparency with our work. Before the market crashed, I'm sure most of you that follow my work closely will already know this, but in the lead up to the crash, in the 2 weeks before, I was posting my analysis, telling everybody to get defensive, obviously with my clients and subscribers preaching defense, and 76% of our clients and subscribers got defensive ahead of the market crash, and that's obviously enabled an incredible performance since the start of the year. So again, if you haven't seen any of that analysis and you've maybe just come across my work, I will post the follow-on video for the analysis from before the crash, so again you can get a bit more insight into our work and you can determine whether or not you think that it would offer you any kind of value. But I think if you're trying to get away from day trading, or maybe you're trying to fit investing and trading around a career or a business, maybe you want better consistency, whatever your deal is, again, I would just encourage you to go and have a look at our website. And I think at this point our work speaks for itself. But again, please go and do your own due diligence if you're interested. It's $500 for the year, and yeah, if you're interested, there's a link below. All you need to do is register your details. But if you have stuck around to the end here, thank you very, very much for watching, and hopefully we'll be able to welcome you soon. Thank you very, very much.